right. Good evening, good afternoon, good morning, wherever you are in the United States of America or abroad. We just want to welcome you guys to day 4, right, of our Fearless Challenge. My name is Joe Rivas. This is my beautiful wife, Blanca Rivas. Go ahead,
Hello,
Blanca.
everyone. Thank you for joining us this afternoon. Again, my name is Blanca Rivas, and I just want to encourage all the ladies on this call and on this platform. I want you to really believe in yourself, go out there and get it, and seek that mentorship that you need to move up to the next level. Let's level up.
All right. I'm excited for today because we got day 4 coming up. And day 4 is very special. Day 1, we learned about the 10 principles of money. We learned about relationships with money. Like, what's your relationships with money, right? We also had the 5 keys to really pay attention to while you're doing your retirement, while you're doing your budgeting, while you're building your finances, right? We call it building your empire, right? Also, day 2 was really about personal self-assessment, right? The money system. If you guys remember the jars and the money system that Kyle Salon, senior EVP, did, that was incredible. And then, of course, we had, CEO close out that day with a great message, knowing your numbers, knowing what to do, knowing why you want to do it. Day 3 was amazing too, guys. Day 3 was working with budgets, right? Dealing with interest, right? We showed so many things about what was happening in the industry right now, the state of America right now, and all the things that are going on, right? You need to be aware of. And that's incredible what you need to really know and focus on based on what they're really showing you, right? So we've gone through all of that. We had the 5 keys for financial success. It was actually 7, right? That CEO gave you. And today's going to be very special because we've been talking about, what you're doing, how you're doing it, the basics of money, right? We've been talking about the basics of money, basics of finances, about budgeting and why you want to put money away. But we've also been showing you, right, the problems that are out there right now, the issues that people are dealing with. Taxes. What about taxes? What about the volatility of the market? What about, if I want to retire with dignity and I want income for life, what about those things, right? Because we are talking about those things all day long. And that's in conversations for a lot of baby boomers right now, but also a lot of people that are going into the stages of gaining their years of retirement money. So what we're going to do today, I'm so excited about because we're going to show you why Exertis is the difference in the industry, because we are the ones that have the solutions for all of the issues that you're having out there. Worried about running out of money, outliving your assets, worried about maybe paying too much in taxes, right? Worried about, man, the stock market crash again this year. How is that going to be? You're worried about that. So we want to show you the solutions that Exertis has for you. And these solutions are powerful. These solutions have been around for years and years and years, but most people do not know they exist. Guys, I've sat down with multimillionaires. I've sat down with business owners. I've sat down with tons of people that say, Joe, how come people do not teach this? Right? And that is the difference of what we do. We financially educate you on all your options that are available so that you can make the decision if you want to take advantage of those or not. But I promise you, if you go to do the research, and we'll give you a couple books later on to research to back up what we're talking about, you will understand that the affluent, the wealthy, they've been doing it for years and years and years. In fact, that's how they've been able to transfer their wealth so that there is generational wealth, right, going on for different generations, like 36 generations in the Rockefellers, right? You'll understand all of these principles today and understand why you're going to be excited about what we've been teaching you all the way through, but the fact that we're giving you the solutions, right? The solutions to be able to put them into play. And that's what we're going to do today. So I'm so excited, guys. We're about to give you the 1-2 punch in the financial industry with the uppercut, right? The 1-2 punch. We're about to give that to you right now. And the first punch we're going to give you is going to be from this gentleman. And today it's going to be a Hawaiian takeover, right? We got a lot of leaders from Hawaii. Shout out to the Maui crew, the Honolulu crew out there. Shout out to our teams out there, Josh and Puni and everybody out there doing their things, man. We're excited for you guys, but we're excited for what the leadership is doing in Maui. And today we have two of the top leaders out there. They're going to share with you the solutions that are helping families all across the United States of America, guys, not just in Hawaii, but everywhere across the U.S. So please help me welcome this gentleman that, man, I've grown to know him so much in Exertis. We're like Ohana, which is family, right? And we are blessed to call him a friend, but also a business partner in Exertis. This gentleman right now, guys, he just retired from the military and now is giving his full time to Exertis, and it's showing because he's making such a big splash, guys. And I'm so excited for him. He's going to be talking about one of the biggest solutions we have today, which is BYOB, Build Your Own Bank. Please help me welcome to the stage the one and only Kelly Davidson. Are you there, Kelly?
Yeah, Joe, can you hear me?
Absolutely, Kelly. The call is yours, man. So proud of what you guys are doing. Hey, show them the BYOB. I'm excited for it. Let's go.
Absolutely. Joe, Blanca, I tell you what, thank you so much. You know, I'm excited because this is a major change, you know, into what we're really doing in the financial industry. You know, BYOB, what is it? It's building your own bank, right? And I want to talk just for a few seconds here before we dive into the slides. But when we just did our grand opening here this last Saturday, we did a 2-day workshop leading up to it. And our agents got to see a deep dive on how the BYOB is changing not only family members, it's changing the lives of business owners, and it's really revolutionizing the entire industry when we take a look at what we're doing with our finances. And with over 200 people in attendance at our grand opening, it sparked a large interest. Why? Let me show you. All right, so let's dive into the BYOB here, and let me show you a little bit about what building your own bank can do for you. All right, so building your own bank. Well, let's talk about what the banks are doing. Banks make a fortune with your money, right? And what do we do with our money? We put it into our checking account, our savings account, right? And what is our account getting us in terms of an interest rate? Maybe 0.5%, 1%, whatever it might be. You know, it's not very much money, but that's what we've been just taught to do all of our lives. Well, what is the bank doing? They're turning around and they're investing that money. They're lending it out to other businesses. They're giving it out in terms of credit cards, loans, and they're gaining the interest from you in that industry to turn around and be able to put that back into their own account. Well, what if we just simply did what banks are doing, but not necessarily what they're telling you what to do? Well, this is really the difference between what the traditional is doing versus what the wealthy is doing. You know, I went to school for a while, and just like Joe mentioned, I got a career behind me in the military, and I built businesses over the years, but I've never actually been truly taught how the finances work in this type of industry. So let's use just, you know, the average Joe here, or, you know, you got Joe right here. He's gripping those $20 bills like it's the last ones kind of thing. He's making $5,000 a month in income, and he's putting it into the bank. Now, where's the majority of that money going out for? It's going out for debts, expenses, right? Your mortgage, gas, groceries, you name it, everything to keep your household going, right? So let's say $4,200 of it's going in there, and you save a little bit left over to be able to go to the movies, right? Go to the beach, right? Or have a little bit of fun, right? And let's say that's about 10% of your money. All the while, hopefully, you're putting about 5% into savings. This is quite remarkable because when we take a look at how many people are putting money into their savings today, really, it's over 70% of people don't even have $1,000 in their savings account today. And that's really sad to say. Now, just like Joe, he's living paycheck to paycheck, basically, right? And all the while that money is going into your checking account, Or perhaps you're even using a vehicle like a 401k, 403b. You're putting some money into a retirement, but these are taxable buckets, right? Uncle Sam's going to get a piece of the pie, but is there a different way? Well, this is the way the wealthy think. They turn around and they have their money going not necessarily into just a checking account and letting it sit there, but they're using an alternative bank that is kind of like a BYOB, right? It's build your own bank. And they're leveraging the money in there to get tax-free loans, to be able to eliminate debt, to be able to finance future purchases such as a car or a house, right? And they're able to take control of their finances. There's all kinds of opportunity. You got to look at opportunity costs, right? If I am taking that dollar and I'm going to spend it, I'm going to give up that dollar for something, right? But what if you were able to use that dollar over and over and over again? This gives you not only control of your finances, but we're talking about tax deferred growth. We're talking about debt elimination. We're talking about family protection and wealth creation, right? And frankly, for my wife, it's the most, the greatest thing is security. It's that peace of mind, right? Knowing my family is taken care of because of the way we're handling our finances. Let's look at the rule of 72. Now, if you've been a part of this financial fearless challenge over the previous 3 days, you would have noticed we discussed this once already. Now, we already got a great understanding of what the rule of 72 is, but how does the rule of 72 work in a BYOB? Let's use this example here. Previously, we used the example of 7% interest and 14% interest. But let's use that interest rate of, let's say, what your checking account's giving you. Or I don't know of any checking account that's giving you 2%. But in this case, let's say we gave you a great 2% rate here. 72 divided by 2% would be 36 years. So that would be how long it would take for Joe to take his $5,000, put it into the bank account, and it would double over the course of the next 36 years from 5,000 to 10,000. So let's say Joe's 29 years old. What would it take, or what would it look like if Joe turned around and put that into an alternative bank, right? And well, what does the bank do? First of all, the bank would say, hey, Joe, thank you for being such a great customer. You're so awesome. We're going to give you the free t-shirt, and we're going to give you a credit card in the form of $5,000 at a 12% interest rate. Now, what's Joe doing here? Joe is all excited because 12% on a credit card or a loan, hey, that's pretty awesome, because what are credit card rates today? 15, 20, they go clear up to 30%, right? So he's jumping up and down with joy. Now, what is the bank doing with that $5,000? Well, apply the rule of 72. 72 divided by that 12% equals 6 years, right? So the bank is doubling their money from 5,000 to 10,000 by the time Joe is going from 29 to the age of 35. That is huge, guys. This is a big deal, because what does the bank turn around doing? They're doubling it every 6 years. And by the time Joe reaches age 65, the bank will have earned $320,000. And what do? They say, hey, Joe, you're such an awesome customer. We thank you for your time, and especially your money. We're going to give you $10,000 back when you're at the age of 65. And what does the bank earn? They earn a big old whopping $310,000. Is that fair? Well, hey, they're playing the game. Why don't you? So what is it that we do to help people be able to do this? We sit down, we look at your personal financial portfolio. We do that assessment, and we dive in and we take a look at the whole picture. And we say, hey, what is your mortgage like? What is it? Are you renting? What is your debt? What is it? Life insurance? What kind of assets? Your 401k, 403b. And we're able to take a good snapshot of that and be able to put you into a BYOB that's going to achieve your financial dreams, achieve your financial goals. So let's give you a few examples of how this works. This is a real situation. A BYOB for a family that's in debt. Female, 35 years old. She had 8 different types of debts. Okay, she had credit cards, car loans, student loans, personal loans, but the total debt was $50,000. Okay, the monthly minimum payment she was making towards the debt was over $1,200. Okay, now this is tough when you're married, and in this case, she's got 2 kids, and doesn't make a lot of money. But when you got $1,200 a month going out just for debt, it's hard to achieve your financial dream if you've got this big old ball and chain hanging behind you. You can't get up and run if that's continuing to drag you down. So let's look at this. What happened? Well, through our BYOB, we're able to provide you a professional report here breaking down just how long it would take for you to get out of debt. Okay, let me summarize this for you. That $50,000 would have normally taken, if you take a look in the center right there, 6 years to be able to pay off that debt. And that interest would have been over $12,000. So what is the true debt right there? Under your current plan, it would have been over $62,000 being paid off in 6 years and 1 month. What does the BYOB do? It simply reallocates the money that you already earned, just like Joe, $5,000 a month going into your account. But we're simply moving that money into a strategy, just how the wealthy would be able to do it. But we're able to do what the wealthy is doing with millions and billions of dollars. We're able to do it on a family plan. And simply, just like this female with $50,000 of debt, we're able to get that paid down in 2 years and 3 months. Unbelievable. Not only are you getting it paid down in a shorter amount of time, but we're eliminating a lot of interest on top of that, where the debt action plan has scheduled interest of only $5,000 instead of over $12,000. Really remarkable what this is able to do. How about business owners? Okay, let me tell you a little bit about myself. I've been building businesses for a long time, and this situation is actually my situation here, as if I was 35 years old back in the day. Okay, I was paying myself $100,000, cash flow about $30,000. Okay, and this is an example of what a BYOB could do for a business owner in the same situation today. Now, let's say you took a modern day whole life insurance policy and used it like a BYOB. What would this look like? Well, take a look at this. Look at the first line there, 36 years old, and I took $50,000 a year out of that $30,000 a month of cash flow, and I put $50,000 a year into a BYOB. Now I'm going to show you on the far right hand side, what does that give me? It gives me an instant estate of $1 million. $1 million to take care of if this business goes down, or something happens, a huge crisis, or something where my income stops and my family is completely dependent on my business, on my income for them to be taken care of. I have $1 million in place to leave behind so that they're taken care of. I love that. Where else can you get that? I don't know. And now let's fast forward, okay? Because I always get the comment sometimes that, gosh, isn't whole life expensive? And I always like to show them this, even as a business owner. Look at year 10. Look at that bottom row. Now, at this point, we've been putting in $50,000 into this, and look at the cumulative premium in the very center. That is $500,000. Now, you're saying, man, Joe has put in $500,000 in 10 years. That's a lot of money. Now, keep in mind, we're not treating this as a life insurance policy. We're not even treating this as a traditional whole life policy. No, this is a modern whole life policy used in a BYOB example. And what happens is the cash value at the end of 10 years, look at that on the right-hand side, is $523,000. If I've got access to $500,000 and yet I've spent $500,000, what is the cost to me? Nothing. That is opportunity cost at its finest, guys. This is really remarkable. Now, hey, let's fast forward, okay? we've been doing business now for the next 20 years. What does it look like now that we're going into retirement, right? At the age of 65, look at that bottom line there. What do we see? We have put in a $1.5 million every year from the age of 35 all the way up to 65, and now we're at $1.5 million we have put into our own bank. I am now the bank, right? And what is my cash value that I have access to in the event that I want to either open up another business, open up another franchise, I want to buy more capital, I want to or get more equipment or vehicles or whatever the case may be. I have $2.6 million sitting in my cash value. And what is my death benefit? $4.3 million. Does that put you in a pretty good state of mind, financially, everything, when you're entering into your retirement years? I would say that looks pretty good to me, right? It definitely beats that 0.5% sitting in my checking account, watching the money go in and out every day, right? Hey, what about a homeowner? Let's take a look at an example of a male, 35 years old, and $500,000 VA loan. Like I mentioned, I've been in the military. I just retired, 24 years of service. And let's say I were to buy a house in Hawaii. Well, frankly, you're not going to find a house for $500,000. Okay? So maybe it's going to be closer to $1 million, but maybe you're on the mainland, right? And you're looking at a $250,000, $300,000 home. So let's just choose a middle of the road loan here, $500,000, 30-year fixed rate at 4.5% interest today. But let's say we do that financial assessment, right? And we were able to reallocate $1,000. I drive a debt-free car. I got no credit cards, but I got my mortgage, right? And I'm going to be able to reallocate funds. I'm gonna skim back on my Starbucks and pizzas a little bit. I'm going to reallocate $1,000 a month simply to be routed through the BYOB before paying off that loan. What does it look like? Well, let's break it down here. Well, my current plan, if I were just to pay directly from my checking account to the mortgage, like most people do, this is what it looks like. Look at the bottom line here. After 30 years, it would simply take $911,000 to pay off that mortgage. Wait, it was a $500,000 mortgage, right? What we don't take into consideration is that interest really piles up after the course of 30 years. So it would take a lot of extra money. In fact, it would take $411,000 extra just to pay off that $500,000 mortgage. What if we were to change things around just a little bit and route this through a BYOB? We could break it down now. Take a look in the upper left-hand corner. We have gotten this 30-year mortgage down to 18 years and 7 months, just simply reallocating $1,000. I don't know about you, but I don't want to be in debt for the next 30 years, even if it's good debt like a mortgage, right? So now let's look at that number. Look at the bottom of the screen there under the interest rate column. Now we've gotten that down from $911,000 down to $835,000. Look at the interest paid. We got it down from $411,000 that we paid in the interest down to $335,000. But more important than interest, more important than the amounts paid on the mortgage is time. That is something we cannot get back. We cannot get time back. Even as every second that I'm talking right now, there's nothing that I can do to the past, but I can do something about the future. And simply getting a 30-year mortgage down to 18 years and then being completely debt-free, this is incredible. So I share all of this with you to say your future is really built today, right? And that's everything I want to share with you on the building your own bank. But I want to talk for just a second to wrap this up to say, hey, if you're not too sure about how this truly works, then really speak to an agent today with Exertis Financial Partners. Now, the unique thing about this is Exertis Financial Partners is doing something that nobody else can do. I don't know of anybody else that can create a BYOB concept like this, give you an instant estate, give you the cash flow, give you everything you need to be able to run a successful business, create security for your family, and literally change generation after generation, keeping you debt-free, building wealth, and it's tax-free. It's amazing. So, hey, I want to turn it back over to you. I hope you got something out of this, and God bless you.
Absolutely, Kelly. What a great presentation. Short, sweet, to the point. But just all the points that you made about being able to solidify just by redirecting a little bit of your money and creating your own bank. Can you imagine paying everything you owe in half the time or less without spending any more money? We're just moving it around, and we're teaching you, right? Like the relationship with money. Most people know how to make it and they know how to spend it, right? But what if you had that relationship where your money worked as hard as you did for you? And that's what BYOB does. It shows you how you can, just by redirecting and moving things away, solidify your family in many more ways than one. But being able to pay off your debt in half the time or less. Do you know that most people right now cannot retire, even though they're baby boomers getting ready to go retirement, hit year 65? They cannot retire because they have debt, mortgage debt. And this is how we can teach you how to do that. So amazing job, Kelly. Man, there's no how can I say coincidence that you're doing very well out there in Maui and really changing the way people see their options of their money working for them. Congratulations, Kelly, to you, man, and to your team in Maui. Congratulations, guys. So we're going to move on. That was the first one. That was a woof. That was that one coming out. All right. Now we're going to come with the woof right now. And this one is incredible because, you know, taxes, guys, taxes is really big. There's a book out there, and I want you guys to grab it. And this book, and we'll throw out a shout out to this gentleman because he's been a special speaker at our events many times. We do some really great training with him. Last time he gave us about 6 hours, like 4 days of just intense training, right, on understanding what's happening out there with the taxes. You got to get this book. It's called The Power of Zero, and it's getting everybody into the tax preferred area, the tax-free area, right? And it's David McKnight, and you can look him up by The Power of Zero, right? And he talks about this, and this is where you need to understand, guys, how powerful education is. Most people don't know this, but when you look and you say, when was the lowest tax brackets have ever been? The taxes that we pay on our income, when was it been the lowest? What year? And most people won't even know the answer. They'll guess. They'll say in the 20s and the 30s and the 70s. And guess what? We're here to tell you that the lowest taxes that have ever been is today. Today, right now. And how many people you know are complaining about paying too much taxes? And this is the lowest they've ever been in the United States, right? Then you have to realize, when was it the highest and what was it? And the highest tax bracket was in 1946 after World War II, right? Inflation had to come up, things had to come up, so they raised the taxes to kind of counterbalance that. And if you made $250,000 or more, you were in a 93% tax bracket. Can you imagine 93% tax bracket? Guys, this is why taxes is a big deal. You need to understand how to limit your tax liability and be able to grow money for your future, right? Without the heaviness of paying Uncle Sam, right? Pay Uncle Sam now while you still can, while the taxes are lower, so that when you go retire, you don't have to worry about all that. And that's what our next presenter is going to share with you guys. So excited for you guys to understand this. Please help me welcome this guy. This definitely guy is a brother from another mother. We call each other Ohana, and we really just are blessed to have them in our lives. Me and Blanca are blessed to have him and Kylie in our lives. But he is doing a movement out there in Hawaii and Maui that's incredible. And we're going to continue right? Continue to help them make that movement until it reaches the mainland. It's going to be incredible. Please help me welcome, Executive Vice President, Mr. J Panda, Jason Attiling. Are you there, Jay?
Brother Rhino!
Yeah, brother.
What's up, brother? Thank
How's
you.
it? How's it? You good?
Good, thank you, man. I appreciate it. And just so you guys all know, that wasn't a curtain. That was my jersey. All right? Yeah, I just want to clear it up. They're like, oh, wow, where'd you get that backdrop? That's my shirt. All right, thank
All
you.
is yours, J Panda. Thank you.
Thank you, brother. So, yeah, like what Joe was talking about, taxes, and one of the things I've learned about the financial industry is that there's two things that's guaranteed in life. It's taxes and death. And when you hear those taxes and death, I mean, the reason why taxes come first before death is because that's what's killing people is taxes, right? So, guys, my topic for today, I'm going to talk to you guys about one of the solutions. Well, actually, it's actually my favorite solution, and it's called our 770X. But I will elaborate more about 770X here just in a moment. But I want you guys to all please take notes on what's happening, what I'm going to share. And let me pop this open. Present. This is what I was afraid of. Okay. Hold on. Slides. Wait a minute. Brother Noel. Share screen. And here. Okay, and Brother Rhino, if you can let me know if you see the screen clearly.
We can see it, bro. You're good to go. Just click it from there.
Thank you.
You're good to go.
All right. So, guys, I will be talking to you guys about one of our greatest solutions here at 770X. And I want to start by saying that if you guys start having a 401k, 403b, Roth IRAs, or just a traditional IRA, please take. I'm not going to tell you to not contribute. I'm not going to tell you to stop it. I'm not going to tell you any of that. What I am going to tell you is to explore your options that can take care of your potential future finances, especially when it comes down to retirement. Because one of the greatest things that I was taught in life and business life is that retirement shouldn't be based on age. It should be based on how much money you have. See, and also in business, what I was taught, it's not about how much money you make in a year. It's how much money you don't lose, how much money you save, right? So that being said, I want to go ahead and talk to you guys about our 770X. Now, see, the common problems today that people are experiencing, especially with their retirement vehicles, is market. The market, it crashes. I mean, just take a look at what happened this year, last year, 2008, and so on and so forth. So therefore, history will repeat itself. And the craziest thing is that when we talk about the market crashes, are you prepared this time around when history will start to repeat itself? Are you prepared today? Is your money protected? Right? Inflation, that exactly what we're going through today. Right? Things are rising. So if things are rising today, are you putting away enough money to secure your retirement, to secure your potential future? Right? And job loss. Sometimes it gets hard for people to even put money aside because they lack job. But here in Hawaii, it's not so much they're lacking job. It's just that people don't want to work. Illness. In Hawaii, this is very big. I mean, this afternoon, we have an appointment with a 60-year-old and a 35-year-old that has illness, unable to work, unable to do things like that. Taxes, like I said, it comes before death, right? Two things guaranteed in life, taxes and death. Right now, it's at its all-time lowest. And if this is the lowest and we're saying it's high, can't you imagine what the future holds for us with taxes? Longevity, legal situations, right? Probates when it comes down to your retirement, death. Now, these are problems that people are experiencing. And maybe it ain't you yet, but you want to prepare yourself so that way you don't have to go through these eight financial problems here or risk. So moving on, I'm going to talk to you about 4 major things that a 770X can actually do for you guys. But the 770X is also known as an index universal life insurance policy. But I don't want you guys to get scared on that. Oh, life insurance. Don't think about life insurance what you think you know. So take out whatever you think you know about life insurance, throw it out the window, and I want you guys to think about life assurance. All right? Life assurance. So here, the first thing I want to talk to you guys about is indexing. So what is indexing? Indexing, it helps you protect your money, and so that therefore it guarantees you no losses. Okay? Indexing allows you to have market protection with market potential. I'm going to repeat that one more time. You will have market protection and market potential. So what does that mean? Well, right here, when you take a look at my heart rate, your heart rate, or in this case, how your money is looking, it goes up, it goes down, it goes up, it goes down. They call this the roller coaster ride, but I call this people's heart rates. Why? Because your heart rate goes up because you're making so much money. You're so excited. You feel like kissing the owner of your company you work for, and guess what? You feel like you're on top of the world. But when the market crashes, then you feel like killing the owner of the company you work for, right? So therefore, I call this your heart rate. But in other terms, that's your 401k, that's your 403b, that's your Roth IRA, that's your IRAs, your traditional IRAs. That's why here in Hawaii we call IRAs IRAs. It's irritating because we're putting in our hard-earned dollars and we're losing so much money. We lose more than we make. And some people say, hey, don't worry, you'll make it when the market goes back up. It's true. But how long will it take you to finally recover what you had in there? Here, when you put your money in those type of vehicles, you will experience market gains when the market goes up, but you will experience market loss as well. So is that really safe for you? Is that something you can really sit comfortably in today and say, that's the vehicle I want to choose to give me my retirement in the next future? Some of us already underfund our retirement plan today. So if we're already underfunding our retirement plan, are we even going to have a retirement plan when we retire at 67? Well, here in Hawaii, it's 67. So that's questions you got to start asking yourself, and ask yourself today, because it's better late than never. Sometimes late is late, but hey, something is better than nothing. But at the same time, ask yourself the most important question. Can you even retire at your retirement age? So that's why if you're young just like me on this call, sit with a professional individual and start planning. Because people in their 50s, heck, people in their 40s, 50s, 60s, they wish they did this sooner, right? So take a look and ask yourself that question. And the other question you got to ask yourself when it comes down to this, how much money can you afford to lose for retirement? Because if you keep putting in these vehicles here, 401ks, Roth IRAs, all that kind of stuff, great. But if you keep putting in those vehicles, ask yourself that question: how much retirement money can you afford to lose? Now, indexing, I call this the stairway to heaven, because it only creates steps, meaning you will have market gains with no losses. You only participate on the gains. So therefore, when the market goes up, you go up. When the market goes down, it flatlines. You're not dead, it's just not participating. So therefore, your money is being protected and growing. You could have the same benefits as the 401k without the risk. That's exactly what indexing is. That's exactly what 770X is here at Exertis Financial Partners. And no, it's not Bond, James Bond. It's 770X. That's how we protect your money. All right. So understand how indexing really works, because here, while people were losing money during all this market crash and everything like that, our clients with Exertis Financial Partners who has 770X, they did not lose a penny. So it feels good whenever we go back for an annual review and we show them that, look, this is the amount of money you made during a trying time with the market. It is a great feeling as professional agents to know that we are there to help sustain the potential future finances for an individual, versus being that professional agent going back to that client and saying a year later, Mr. and Mrs. Smith, I'm sorry that you lost 18% of your funds, of your retirement funds. Now, ask yourself now as a client for yourself. Would you rather lose, or would you rather not make any money during downtimes but gain when it's going up? Or would you rather win the biggest but also lose the worst? All right. So that's the big difference here with indexing. All right. Now, indexing with 770X allows you to diversify your money in a program such as our cap program, uncapped, fixed, utilizing the S&P 500 or Barclays. The most unique thing about us here at Exertis Financial Partners, we would set up your 770X account to where we know what will make you the most. Because here we believe, and it's part of our code of X, it's our DNA with Exertis Financial Partners. It's the mission before the commission. But the most great thing, again, as a professional agent, is to know that we did our best to help the client we sit for gain trust, long-term relationship, rather than short-term, because we played around with their money. All right. So that is indexing. Now, the second thing I want to talk to you guys about is IRC 7702A. All right. Now, what is that? Am I being a fancy professional here? As you guys can tell with my English, it's not that great. But let me tell you something. IRC 7702A is important for a lot of us to know, because it allows you to access your money tax-free to the cash value in your policy, and also with no fees and penalties. Tax-free, guys. So could this be a tax-free supplemental retirement income? Absolutely. The biggest question is, why not? Why not utilize this? Do you want to continue to pay taxes, or do you not want to pay taxes? Ask yourself that question. Because people that I know, when it comes down to pulling out their 401k, they need an excuse why they need to touch their money. And because it is a great excuse, they will release money. And when they release money, they're going to pay fees penalties, and taxes. That's what's crazy. Here, it's your money. Use it when you need it. You don't need to give an excuse. You really don't. So here, this 7702A could act as a supplemental retirement income. So therefore, this is why I'm telling you guys, please take a look at this as an option for you to have a potential retirement account. Because it could be that retirement income that you're looking for. And here, there's no limits, just like the other vehicles that I'd mentioned earlier. There's no limits. Here, the limit is up to you. What could you put in? Better yet, how about we look at this as a huge gift to an 18-year-old, which could be your child. If you set it up properly, you could give them this type of account as an 18-year-old birthday gift to go on and go to college or get your car or whatever it may be. Because you could set this up for college funding. Or how about yourself when it comes down to emergency situation? You know, I have a partner of mine here at Exertis Financial Partners, and she came to me and she told me that she was able to help her 2 clients with the combined cash value of $25,000. She was able to help them withdraw it to take care of the roofing situation that they have of their house because of that small storm that we had last month. She was able to do that in an emergency situation. She was able to help take out without any explanation to the carriers. They were able to withdraw that $25K for their roofing situation, to repair it, to get it done. And here's also the other thing too, is that they got it out tax-free. They got it out tax-free. As a matter of fact, they got it in on the 7th business day. We normally tell people 10 business day. They got a check on hand, got the roof repaired, and it's magical. Investment opportunities. Here's one for you. The same individual that helped that person with the emergency situation with their roof, she was able to help somebody withdraw over $30,000 to purchase property in the Philippines for their future investment. $30,000, little bit over $30,000. Now, is this happening for special people? Absolutely not. It's special events during special people. Meaning, these special events is what is going to make that person feel special. That could be you. Investing, emergency, college funding, supplemental retirement income, passion projects, right? Wives that want to build a deck, right? Or an awning, whatever it may be. House projects, to all the husbands out there. Whatever it is, whatever that passion project is, just know that you could have this. Or even your lifestyle, vacation. Set something up. Take a look at this, because these are key factors that's within the 770X solution that we have that the other vehicles don't have. That's what's so amazing about this particular solution. And guys, that's only 2 of the 4 things I'm going to talk about. So could any of this right here, as a supplemental retirement income, tax-free, college funding, tax-free, emergency situation, tax-free, everything is tax-free. Could you use this? Is this something you want? Or is it something you need? Because you want to grow money, you just don't know how. Or you think the 401k is the greatest. Or you think the IRAs is the only way. And let's face it, the only reason why we're going toward those other vehicles is because that's what the HR presented to us at our job. Take a look at these financial education seminars, because seminars like this that is happening today can help you explore your options for your potential future. So that is 7702A. And IRC is just letters that make up Internal Revenue Code. All right. So the next thing I want to talk to you guys about is IRC 101G. Now, 101G here it is also just known as living benefits and disability income. Right? Living benefits. Now, I want to talk to you guys and elaborate about this because this is something very important that we all need. Because one of the biggest questions you got to ask yourself is this. Currently, you're working at your job or being an entrepreneur, being an intrapreneur right now, and you're able to do things today. But what if some type of illness strikes you tomorrow, or some type of illness strikes you 5 years later, 10 years later? Do you have supplemental income if you're unable to perform your work duties today? And if you are unable to work for 6 months to a year or maybe 2 years, the question is, are you going to have enough income to take care of your bills? Because one thing I've learned, and being on my own, being a responsible adult, we may stop working and we may stop getting money, but the bills we create will keep coming until it's paid off, or it's just lifetime bills that we cannot stop. Bills will keep coming no matter the situation. So are you prepared for that? And one of the things that I've also learned in this industry is that sometimes it's harder for us to recover in the time frame that is given, not because we're hard-headed and stubborn, that we don't want to listen to the nurse or the doctor or our physical therapist. It's not that. We're trying to rush back to work and not take the time to heal because we're stressing out because bills are piling. This right here, IRC 101G, also known as living benefits, can help you at that particular time. Do you have something like this? Does your 401k offer you something like this? Does your 403b, does your Roth IRA offer you something like this? And go ahead and look into it if they do. Let me just stop you right there and tell you it doesn't. As a matter of fact, those companies don't even care if you get sick or not. They don't even care if you stop contribution. Let's just be real. So prepare yourself for something like this. Prepare your entire family. Because if you don't have something like this and you continue to stress out, what else can happen? So here, if you have critical illness, chronic illness, terminal illness, how many of us know people that have heart attacks, strokes, diabetes, people that cannot walk, eat, bathe on their own, things that nearly put them in a hospital bed and they're only given X amount of time frame to live. Have we experienced that with our loved ones? Were they prepared? How many GoFundMe accounts you see to help people get back on their feet? Some people get the biggest mistake about GoFundMe. It's not a guaranteed thing that will help you and your family. That's just asking people to GoFundMe, please. You're asking. People are creating these accounts asking for those things, asking for money. So therefore, you're going to start to depend on that because that becomes like another source of income. But it's not guaranteed. It's not guaranteed because the question I want to ask you all that's watching on here, how many GoFundMe accounts you saw through your newsfeed on social media and how many did you donate to? Because I'll be the first to tell you, I've seen plenty, but donated to very, very few. Get something in order today, so that way you don't need to worry about having a GoFundMe account. Get something like this today, so that way you don't have to stress out and try to force yourself back out to work, or forcing your spouse to go to work, and when really your spouse wants to be there for you to take care of you. This is something that should be very meaningful to you, because now when you want to talk about generational wealth of knowledge to your children, when they're able to see that, man, my dad or my mom had things in place so they could take care of each other, love on each other, be there for each other. Generational wealth doesn't always mean money for the upcoming generations, although I'm not against it. Money gives you options, but a wealth of knowledge as well can also help teach your kids during trying times in life. So who's to say that we won't have trying times in life? Because there's sayings out there. Life threw a curveball. Life threw you lemons. Well, that's why they say, if life throws you lemons, make lemonade. Make the best of it. How? Right here in this particular situation. Life threw you a curveball. Well, batter up, because bat that bad boy out of this ballpark. Those are just negative problems that can bring you negative energy. But then here at Exertis, we don't take in that energy. We just know that for every problem, there's a solution. You're losing money, we can help. You want your money tax-free, we can help. You need income, supplemental income, because you're experiencing critical, chronic, and terminal illness, we can help. That's how important this is right here. So here, these are the three key things already. Indexing, protection of your money. 7702A, tax-free of your money. 101G, living benefits. Let me talk to you guys now about instant estate. So what is instant estate? Does your retirement plan offer you life insurance? Oh, no, I got from my job. Okay, group term insurance, whoop-de-doo. But what happens if you leave that job? Do you still have that? Better yet, what happens when you leave your job and they stop matching you? Again, don't think of life insurance like you die, someone else is going to inherit your money. Don't just think like that. When you really take a look at the two words, life, something of existence, right? Life. Insurance, to replace something of value. You are the most valuable person in your family. So if you're unable to work, if you're stressing out because of the downturn of the market, if you're stressing out because of taxes, this can ensure you that this can assure you that you will have better results having a 770X plan. Better yet, take a look at the next set of two words, love assurance, for your loved ones, for you. Because this plan also loves you, because it loves you enough to take care of your family at a time of need. It loves you enough to take care of you and your hard-earned dollars, so that way you don't lose a penny. This here, it loves you enough to take care of you during life-trying times. So when you talk about life insurance, think about it more than just someone else getting your money. But it can help eliminate the debt, so that way your loved ones, your loved ones can grieve properly. How many times you experience spouses? Now, let's really take a look here. How many spouses do you know that lost their loved ones, right? And they couldn't grieve properly because they have to go right back to work right after they buried that loved person, their loved ones. They didn't have time. Just because they cried that day doesn't mean they grieve properly. It can be an income replacement, so that way your family doesn't have to suffer for a year or 2 or 3. Mortgage. How many families you know lost their mortgage because of a loved one passing away? or in America, they call it the breadwinner. What if the breadwinner passes, or when we see things like that, when the breadwinners pass away, then their spouses lose the house. Where does the wife and kids end up? That's the question you got to ask yourself too. Education. If kids are going to college, their biggest dream was to attend college and do something with their life, but it has to come to a stop because the income. Retirement. You know, the money that you build inside the cash value all comes out given to your loved one without probate. You know how great of a feeling that is? And this is just my opinion. You know, that this is just my opinion. And a mentor of mine told me, you know, there's a saying that money doesn't buy happiness. I beg to differ, because it does. When you have options because of finances to put a roof over your head, you're happy. When you have finances that allows you to buy a car, put gas, and drive around and sightsee with your family, you're happy. Put clothes on the kids, put clothes on you, you're pretty happy. Food on the table, you're happy. Education for your kids, you're pretty happy. But it doesn't bring joy, but it brings you happiness. Right? So this is something I want you guys to understand. Don't think about life insurance. Think about instant estate, what it could do for you. Because this here is problems. But on the left side gives you guys the solution. So don't ever for a second think that life insurance is not important. Because so many times, I've heard, being part of this industry, and I don't have 20, 30 years in this industry, but I've been in the industry long enough to hear clients say, I wish I got life insurance when I first got offered. I wish I got life insurance the day my sister-in-law came and offered it to me, or when my son came and offered it to me. I wish, should have, would have, could have. Don't ever put this aside. But if you think that you're having the hardest time to spend X amount of dollars for life insurance, heck, we could even take care of that problem, because here at Exertis Financial Partners, for one cost can give you, for that one specific dollar amount that you want to contribute inside here, it can offer you indexing. It can offer you tax-free supplemental retirement income. It can offer you living benefits. It can offer you instant estate for one cost. You don't have to go and contribute to 2-3 different vehicles thinking you're going to make it in life when you can have it all in one. This is why they call this an index universal life insurance policy. Because you can utilize a policy just like this to deliver 4 amazing benefits that you wish you had, or you wish you have. That's our 770X. And here are other ways to take a look at it at a different perspective. Indexing is also known for crediting for life. IRC 77028, cash for life. What about 101G, care for life? Instant estate, coverage for life. So where can you find a solution like this? You're watching us here at Exertis Financial Partners. We are professional agents to help people in search of a solution like this. We can help people. We're here to help. We are here to help and work with you and prepare something that you need, not something we want you to have. It's something that you need. All right. So I want to tell you guys all, thank you for watching me. And please, I hope you guys got something out of all of this, because I know I did. I know I really did, just going through this again. And although this is something I share with a lot of people almost on a daily basis, but can I just leave you with this? If you are thinking about it and you feel that nudge in you saying, man, that's something we need, go with that first gut feeling, because you don't want to be the person to say, gosh, I wish I did that, when that big brother that had a shirt like a curtain, when he presented. Don't be that person. Rather, be the person that says, man, I did the right thing for myself, for my family, and my family for myself. God bless you guys. Mahalo for listening, and aloha. Brother Joe, back to you.
Mahalo. Yeah, mahalo plenty, your brother Jason, man. That was an amazing description of our 770X. It really was. Guys, I hope you got a lot out of it. Some key points that I want you to look at is the fact that everything is offered in one account for you, right? One policy for you. A lot of people these days say, I don't have time. I don't have time for this. I don't have time for that. I don't have. So imagine being able to put away money for your future, right? And not have to worry about it, not have to watch it every single day, not have to do all that, because you know that if the market crashes, you're safe. And if you know that the market goes up, you're going to grow. And then, God forbid, if anything happens, you're going to be able to pull out money to be able to use right now living benefits. And then, God forbid, something does happen worse, you're covered, you're leaving your family set, right? We know that people right now on their way to retirement are getting sick more and more. You guys know it. You guys, you've experienced it. Some of people that are younger, heart attack, stroke, cancer, all these things are happening. And where do they get the money so that families continue their lifestyle? One of these plans. So right now, just like Jason said, if you got that nudge in your stomach, you got that little antsiness, that little anxiety that says maybe I should take a look at, set up an appointment with one of us, one of the professionals here that can design something that makes sense for you. That's what we want to do, guys. So I'm so excited because what we have been doing right now is incredible, right? We gave you the 1-2 punch, right? That's BYOB 770X. And now we're about to come with the uppercut, right? And the uppercut is our next solution on our next product. And the gentleman that's going to be sharing that with you, man, I tell you, he's the one that gives me hope for the millennials. He's the one, guys, that I'm telling you that just proves that it doesn't matter your age. It just proves that if you apply yourself, you're going to be successful at any level of learning your finances. And this gentleman has learned his finances, guys, and he's teaching others. Older than him, younger than him, doesn't matter. He's able to teach all about finances and what we're doing here. Guys, please help me welcome my partner, business partner, board member. We sit on the board together too, but man, family, definitely family. He's a man of faith, which is our culture here at Exertis. Faith, family, then finances, then fun, then food. Fitness. I'm still fighting to get food in there, guys. Me and Jason are fighting for food, but fitness, right? That's what he believes. That's what we do. That's our culture. Please help me welcome to the stage the one and only Mr. Noel, the Profe Antonio. Are you there, Noel?
All right. Yes, sir. Can you hear me, Brother Rhino?
Absolutely, man. The call is yours, brother.
All right. Thank you guys so much for attending, and thank you so much for the opportunity to be able to share a little bit about my experience, a little bit about what I have learned over the years in terms of this next solution that I'm going to be presenting with in a bit. But I do want to go ahead and commend, of course, the speakers before, Jason as well as Kelly. They absolutely killed it in terms of the 770X plan as well as the BYOB plan. And in fact, too, before I go ahead and get on with my portion of today's segment, I do want to share, a little bit about, kind of like overall, financial the financial education piece, because it's absolutely important. I often say this is that in that no one will care more about your money than you. And so if you wanted to go ahead and make a change, if you wanted to go ahead and be on a different path, or if you wanted to go ahead and just really get to a better place, especially financially, then attending seminars like this, reaching out to people who might be further along the path than you, people who are doing it, teaching this and just practicing it themselves, you're going to be in better shape, especially so. And so that's actually one of the reasons why I got involved in this industry. Because before let me tell you, I was not very good with my finances, and of course, there's still much more room to improve in terms of how I use my money system and my own banking system, right? However, by being in this industry and just learning from individuals in Exertis and people who are in the similar space, I was able to kind of curate my own philosophies that kind of work for myself, and at the same time help others too. And my hope for today is that you guys could take even just one simple concept or one simple philosophy or even one single fact, whether it be from myself, Mr. Kelly, or Mr. Jason, and be able to take that home with you, and your loved ones, your family, and be able to be on a different path towards financial freedom. So guys, I'm gonna go ahead and share my screen here. And before I do that, all right, let me go ahead and take that. Boom. Let me actually share my screen here. Almost. One second. All right. Before. Well, there's hope for everyone in terms of being able to share, no? But 1 second. Bro, Rhino, can you give me about 2 minutes, my man? Can you give me about 2 minutes?
Absolutely, man. Get that ready and get it rolling so we get you back up here. But just to let you guys know, today is about showing you what solutions you have available to you that you may not have known. Now, guys, we're going over hundreds and hundreds of people watching this live right now. And also, no pressure, guys, no pressure, right? But also understanding that these hundreds and hundreds of people may not have known that these options are available to them. And that's why we're here. That's what this is all about. This is about you being able to start to control your finances. And when I'm telling you that most people don't believe this or don't know that they can control their finances, it's the truth. Because we know 57% of Americans are financially illiterate. We know that. We also know that if you look at it right now, we are on the precipice of the worst retirement crisis ever in the history of the United States and the world. We, over the next decade, will see something happen that has never happened before, where our seniors, our baby boomers, will not be able to retire. But they're going to be put in this category that says too frail to work, but too poor to retire. And that's why a lot of big retailers and jobs are creating spaces for senior citizens to be able to work, to continue, so that they can have some sort of income for retirement. And that's very tough, guys, very tough. That just means that we didn't plan to fail. We just failed to start a plan. And I want you guys to understand right now, you have the chance to change. Does not matter your history. Does not matter how bad you are in finances. We were all bad in finances, right? We still have a lot of work to do. We're all bad in finances. So I don't want you to feel like, oh man, I'm really, really bad at finance. How am I going to teach somebody else? Or how am I going to, change my outcome? I'm telling you guys that you can. All you have to do is start. So when you're able to understand why, right? Why you can do these things, it's going to be easier for you to do them. Now, I know for a fact that I've had people not know anything about what we do here. And because the way Exertis is designed to teach you how to be able to teach others what we know, you don't become a salesperson here. You don't become anything. You become an educator. You become a financial educator on all the solutions that are available for somebody. Now, the top 3 that we're showing you, they're just our top 3 flagship products, but we have a whole lot more. We have a whole lot more. We have something for business owners. Man, imagine being able to give business owners the tax break and deduction they need while still putting money away for their future. And I'm talking about saving them hundreds of thousands of dollars in taxes that they would pay to Uncle Sam, but instead they're going to take that deduction and then put it away for their future. That's incredible what we get to do. There's no limit, right, to all the options available out there, even if they are in the stock market, not in the stock market, if they're mutual funds, stocks, bonds. There's so many mutual funds. There's so many, right? But to know the right ones for you, you got to sit down with somebody who, number one, doesn't get paid to educate you. So all the services that we offer Exertis, that we offer absolutely free to our clients. Yes, free. Free, free, right? Then when you look at it, you're talking about all these different solutions, and for us to help you get in a solution that fits your needs. When I say needs, that's the most important thing. What is it that you need and want to accomplish? And that's what we do at Exertis. And we will pair you up with the best product in the market for you. And the carriers that we do, over 100 years old, AA rated, A+ rated, Comdex rating is 96 or above. We only deal with the best of the best for you. So we want to make sure that we make our strengths your strengths. So when you're looking at BYOB and Kelly's talking about it and you're getting excited about that, that's what you want to go to. So I want to make sure that you understand that when you get to sit down with one of us, when you get to reach out to us and say, I want to know more about BYOB 770X, or when you go sit there and you go, you know what, it's time for me to do something. I need to do something. And that's why I'm telling you that you guys can take control of your finances and you can do it right now. So with that said, let me give it over back to Noel, because this guy is going to be giving you one of the best solutions we have for people that are already retiring or that left their jobs. So once again, I give you the Profe Noel, the Professor Antonio. Go ahead, Noel.
All right, guys. Thank you so much for your patience on that. You gotta love technology when it works, but also you gotta I would say slap your knee a little bit when technology doesn't work too. But I want to jump right into it, guys. Of course, I was going to go ahead and talk about one of our other solutions, which is called Infinity X. I want to go ahead and share a little bit in terms of giving this solution a little bit of context, and especially as we transition into individuals who have a retirement account, 401ks, 403bs, TSPs, who are still who might have a good amount of money built up in there. They still have some doubt. They still have some unsettling feelings in that they may either outlive their money, or they might not necessarily have enough to live the lifestyle, the livelihood that they have worked hard for. And so the question that I go ahead and pose is simply, are you 100% sure you're going to have a great retirement, or do you have some doubt? As I was mentioning earlier today, or just a couple minutes ago, and at the same time as Jason went ahead and shared too, some of the doubts that keep lingering in our minds, whether we speak about it or not, we have to test for the financial risks, right? Market risk. We have inflation risk, longevity risk, or fear of outliving your money, right? Taxes risk, catastrophic illness. You have disability emergencies, legal risk, and even more so mortality risk, right? So with those factors in play, we want to go ahead and be able to do what we can to not only further grow our retirement accounts and the assets, but also to really protect what we have, especially in terms of the market. And so, is for those people who are on the call today who maybe have a qualified retirement account or QRA, is your retirement account structured to where you could have income for life? And a lot of times people, they do not have that. Some also to the point where they don't even account for the taxes that are at play. So for those who don't know, what is a qualified retirement account, right? Because we always hear too within the businesses we're involved in, the organizations we're a part of, or even the workplaces, it's often just thrown out, amongst your peers, amongst your coworkers, and that, do you have a 401k? Do you have a 403b account? Why not? You should. Of course, how is anyone who's not in your financial situation going to tell you you should or should not? They don't know your financial picture. And so with that, from financial professionals, we're going to go ahead and teach you what is that exactly is a qualified retirement account, right? Before you continue it, before you get into it, you want to be able to know what you're getting involved in, right? So a qualified retirement plan is an employer-sponsored plan that meets the requirements of Internal Revenue codes, making it eligible for tax benefits. And that's a key feature in which a lot of people opt for a qualified retirement plan. Now, the qualified retirement account types include things like 401k, as I mentioned before, 403bs, 457s, TSPs, IRAs, which stands for individual retirement accounts, TSP stands for thrift saving plans, SEP IRAs, simple IRAs, Keogh plans, and annuities. Now, with this, guys, you don't necessarily have to be an Einstein to be able, in terms of all of these types of accounts. The main I want to go ahead and drive here is that if you have one of these accounts or you're considering getting into one of these accounts, just know the classification in terms of taxes, in that it's tax deferred, meaning it gets taxed later, not taxed now, not tax advantage, it gets taxed later. Okay, so it's you're deferring your taxes to a later date. Now, with this in mind, a lot of people, whether they like it or not, some maybe even have some thoughts of like, what could I do with this? My qualified retirement accounts. Could I simply take out the money and just take out the taxes? Could I transfer it over? Could I lump it over into another 401k? What could I be able to do with it? And a lot of people are considering alternatives or options out there because they've seen from experience, whether it be their own or from their parents, grandparents, what the market does to qualified retirement accounts, and that there's a pattern at play in that the funds that have been grown into it, it's lost to the market. That's the pattern in terms of the economy. In fact, in the past 2 to 3 years, especially with the global pandemic, right? A lot of people who have this is just fact that a lot of people who were contributing to these type of accounts, they either had to stop contributing. Some even had to take money out from it to, of course, of course, because they had to continuously live. A lot of companies were closing, a lot of workplaces were laying off employees, right? And the last resort for people were their retirement accounts that they had to pull money from. And, they didn't care if there was any taxes at play or any penalties that were involved in terms of withdrawals. However, a consideration that you guys can think about is conducting a rollover, which is simply a trustee to trustee transfer from a like kind tax classification account to another of similar kind. So as the definition is, a rollover individual retirement account or a tax deferred account is an account that allows you to move funds safely from an old employer sponsored plan, such as a 401k, 403b, to another individual retirement account or another tax deferred account with the same tax classification. Let me go ahead and show you how that looks. No, so a couple of days ago, we did highlight the tax bucket types, the different tax bucket types, and you could actually find that in one of our recordings or our live streams in our social media platforms, such as Facebook as well as YouTube. But we're not going to go more into depth on this. I just want to go ahead and highlight that there's 3 different types: tax deferred, taxable, as well as tax advantage. Now, I went ahead and listed all of, I would say, the primary accounts that goes into these individual tax buckets, because it's all about diversification, right? But since we're on the topic of, since we're on the topic of of um of rolling over your money from a tax deferred account into another account that maybe can allow you to make that money earn more for you, and of course to protect it, then there's some things you need to know. So for example, when it comes to rolling over your money, unfortunately you won't be able to roll over your money from tax deferred accounts into the other two buckets. So you can't be able to transfer, for example, a 401k into a taxable bucket or tax bucket, or you can't simply roll over your 401k into a tax advantage bucket. Why is that? Because they're not of the same tax classification. However, if you wanted to go ahead and conduct a rollover, again, with the goal to simply further grow your money, to protect your money, what you have earned over the years, and to conserve that, then the only options that are available is simply going the route of rolling over your money within the same tax category of the tax deferred account. So 401ks to another 401k, 401ks to an IRA, 401k to an annuity. Okay. So with that in mind too, one of the main, I would say, suggestions or recommendations in terms of conducting a financial planner or a financial advisor, whoever is helping you in terms of planning for your financial future, they will often tell you, why don't you go ahead and roll over your 401k to an IRA, right? And let's talk about this for a minute, because though this is not necessarily a bad suggestion, it might not be the most optimal. Why is that? Because of course, because with a 401k and an IRA, both are still in the market, right? So it still goes to the pattern that it makes money, but it could also lose money. So with a financial planner or financial advisor, maybe with good intention, if they were to go ahead and suggest that over for an individual to roll over 401k into an IRA, are you really helping them out? Especially if it's doing the same thing, right? Still deferring the taxes to a later date, and it's still within the market. So how did you help the client situation, or how would you help the individual situation, right? Though you might have gotten a referral fee to that, it might not be the best a productive way for them to go ahead and grow their money. So another consideration would be to roll over their money, their retirement accounts, into an annuity. And there's many different types out there, and we're going to go ahead and talk about that in a bit. Okay. And so what is an annuity? An annuity is an insurance contract that transfers all of the risk of a down market to the insurance company or the financial institution. So meaning that you are protected from the market and longevity risks if that's set up properly. What do I mean again with longevity risk for those who missed it, or those who came in a little late to this call? Longevity risk is simply not putting yourself in this position where you're outliving your assets or outliving your money. Especially with modern medicine, modern technology, we are living longer, right? The average right now, that versus 20 years ago, we're living all the way up to the 80 years old, even up to the hundreds, right? And so we want to be able to plan to be able to still receive income even when we're older, okay? And we can't work as hard as we were doing during our working years. Now, with an annuity, you simply make a lump sum payment or a series of payments. Usually, guys, it's going to be a rollover from an existing policy or a lazy 401k, but there are options where you can do an in-service rollover for an active qualified retirement account if your company allows that. But the main thing is that you do roll over that money, again, whether it be a lump sum payment or a disbursement of payments. And then in a certain amount of time, you will receive regular disbursements beginning either immediately or at some point in the future, depending on how you would like to receive this money, right? It could be simply the year after you go into contract, or if you consider waiting a little bit, if you don't need this money now, you could structure yourself up to where you're not outliving your money. That's what we mean in terms of some point in the future, because you could be able to structure it that way. Now, the type of annuities, there's many types, right? let's first talk about on the left, the fixed annuity, right? This is going to be where your retirement account is going to be, and the earnings that it could have, it has low risk and has fixed growth. So if you like, if you're more on the conservative side, if you like predictability, if you like if you like progressive growth, then this could be for you. If you don't want any if you can't handle risk, right? Now with a variable annuity, this is going to be the most risky out of these three. High risk, but it does have the potential for high growth, right? Because of course, depending on how the market performs, it could make some serious interest, but it could also lose serious interest too. So again, you're still in that pattern of the market where you make money, but you also lose money. Now, the third annuity type is an index annuity, which is not often talked about, but it's there for people to explore. This is going to have actually the benefits of both a fixed annuity as well as a variable annuity. It does both. So with the index annuity, you could often experience this. You could have you'll have low risk, right? Just like a fixed annuity, but you have the potential for high growth, just like a variable annuity. That's what you could expect. So let's go ahead and take a little quick example with this client right here. We have Mr. Client was recently laid off after 20 years on the job. Sounds familiar? You might know someone in your network. You might know someone in your family, or this could be you on the call as well, where you just recently got laid off. You have a retirement account, again, whether it be a TSP, 401k, like this example here, and it needs to be rolled over, right? So this client has $400,000 worth in a 401k. He has three options to consider. Option one, he can pull it out and pay the taxes and penalties, approximately 45 to 50% of the account total. That's a lot. Option two, he can roll it over to his new job if they offer a 401k, but it's still subject to market risk. Okay, and a lot of people, they often do that, and it's not necessarily a bad thing, but if that's really the only option that's available, which today we're telling you there are alternatives, they could pursue that option two. And then option three, he can simply roll it over into an annuity, protect his principal, never lose another dime, and of course could structure it to where he could have income for life, right? And so I'm sure out of all of these three, we would probably agree with maybe option three to be the one where we could be able to safely and productively grow an individual's money, right? Or really to conserve their retirement accounts, right? And so what if we can show you a plan where your retirement account can have upside potential with downside protection? Usually at this point, people would, a lot of the people that we work with, they'll jump for it. They'll be on top of it saying like, yes, of course, because they're fed up. They're tired of how the market has been performing. They're sick and tired of how, their retirement accounts hasn't grown to the values that they were promised or they were educated on. And this is where the Infinity X comes into play, right? And in fact, too, before I move on to the next slide here, you could even watch several videos on this. In fact, one of my favorite ones is from the, I don't know if they still have it anymore, but the 60 Minutes show, where they actually feature and document the pitfalls of the 401k, which they title it "The Fallout of 401k." It's a great documentary of the 401k. How it's performed, who it has affected, the history behind it, right? And in fact, too, just a little bit about that as well, guys, is that when it comes to 401k, and again, it sounds like I'm knocking it. However, there are strategies that if you optimize it, it could earn you free money. Again, keyword optimize, not maximize. But with a 401k, it's actually not supposed to be a retirement account. In fact, too, during the Great Depression, or after the Great Depression, the government, they wanted to go ahead and position the 401k to be an account to where people simply catch up to their savings. but it wasn't meant to be an account for everybody. All right, just so keeping that in mind. So just by simply having a simple change in perspective, if you're sick and tired of the traditional way of doing things, then Infinity X option can be a good viable option for you, income for life. Now, a lot of times when we're considering annuity to roll over our qualified retirement accounts into, a lot of times, for example, with the client that had 400,000 in his 401k, oftentimes, he'll have two options where he could put his money. One, it could be the bank. Why is that? Because of course it's safe. However, it has very low rates of return. The other option is to put his money into the market, whether it be directly into stocks, into a variable account, or even into a money market account, another IRA, correct? Because it has the potential to earn higher interest than versus the bank, but it's very risky. With an Infinity X, we utilize actually a fixed index annuity where it provides the safety of the bank, but also the potential to earn high interest, just like money market accounts. And that will be the Infinity X. And it could be structured, again, to provide an individual with upside potential, no downside risk, and can be designed to where they could have income for life. Now, we like to go ahead and prompt this question here too, because again, a lot of people are in this situation where they do have qualified retirement accounts and they're looking to do something with it. Now, for those who do have this account, one of the takeaway questions that you could maybe ask yourself is simply, how much of your retirement account, especially during the economic landscape that we're in, can you afford to lose, right? Oftentimes people will say, like, I don't want to lose anything, right? They can't afford to lose because that's what they're going to be living off of eventually, or they currently are. And another question too that you guys could go ahead and ponder on after this session: can you afford for your retirement account to not earn more, right? Do you like your 401k not growing, not earning its full potential in terms of gains, right? And of course, the question is, of course, or the answer to this question is no, right? Because there are options out there, guys, and that's what our hope for today to segment really reveals to everyone on the call, whether it be a BYOB situation to help individuals eliminate debt, and of course, provide guarantees, a 770X plan where they can go ahead and transition to a tax-free retirement, or an Infinity X solution where you could actually transfer or roll over an existing or even an active qualified retirement account to a fixed index annuity option that sets them up where they can have income for life and they won't get into that longevity risk where they'll fear outliving their money. So guys, with that in mind, guys, again, I do want to go ahead and apologize for the technical difficulties earlier in my intro. But my closing remark here is simply that money matters. And of course, as I said, as I started the conversation, in that no one will care more about your money than you. So go ahead and make the right investments in the right places. But the biggest investment that you can make is to yourself. So guys, thank you so much for the opportunity to talk. Have a great rest of the day, and see you guys tomorrow during our last day, day 5 of our Financial Fearless Challenge. Back to you, Joe. Thank you.
Thank you, Profe, the Professor X. You know, guys, why we call him that now. So intricate in his delivery and showing you the slides that he put together. I mean, just amazing strategy broken down, very simple. I know you guys understood that. I know you guys can understand why and how we roll that over and what the purpose is. That's what's incredible about what you can learn here at Exertis, not just as a client, but if you ever thought about, man, I want to do what Noel's doing. I'm a millennial too. I want to help other millennials get out there and do some stuff. I'm a Gen X. I'm a baby boomer. I want to teach people not to make the mistakes that I did by not planning. If you're any of those categories, reach out to us because we can show you how to do this. We have some great information. We have some great products and solutions. Remember, we're a company of solutions. We know the problems that are out there, right? Noel went over it. Catastrophic illness, taxes, right? Market loss, market risk, right? Debt. Big debt, big one, right? We know the situations out there. Emergencies pop up. Where do I get the funds? Most people turn to credit cards, and that's why they have debt. We know the situations. We are a company of solutions. And it just so happens that because we're the only industry that really fills those solutions, right? Really fills all of those problems out there. We're one of the highest paying industries in America. And that's why we want you guys to continue watching us, continue listening to what we're doing. Day 5 is going to be amazing. Day 5, we're bringing all the big guns. We're bringing everybody back here to come out and share with you the lasting ideas of financial prosperity, right? And building your empire. But in order for you to go build your empire, guess what you have to know? How money works. You got to know your relationship with money. You got to know the 10 money principles. You got to look for the things that stand out. Some of the things you got to pay attention to. You have to understand how interest works. You got to have to understand how budgeting works. You have to understand all of these things, right? All of these things and which solutions would be best for you. And that's why we're here. That's why we're here. That's why Exertis, we decided to come out and do a 5-day fearless challenge. And the reason why it's a fearless challenge is most people believe they can't control their finances. And we're here to show you that, yes, you can, that you can control your finances. In fact, you can build your own empire. And we can show you how. You just got to be willing to learn and take action and implement what we teach. Isn't that the way life works? You go to college, you go to school, you go all through high school, you have coaches in football, baseball, basketball, all these things, and they teach you things that are going to help you become successful, but you have to apply them. And that's exactly what we're doing. We're financial coaches, guys. We're financial coaches that are going to help you get there. We're going to pull the best out of you never knew you had before, because we're going to make you dream again. If you guys are older and you stop dreaming, we're going to show you how you can dream again, how you can have